June. Therefore, the 2025-26 SOI is largely consistent with last year's SOI with the following updates. Updated annual goals on page 6 to reflect the diversification focus, and simplified financial performance targets on page 6 to better reflect the performance of the company. Key items we would like to discuss with councillors are confirmation of strategic direction and diversification pathway, impact of Alpine performance on TDHL financials, and the dividend forecasts. So I think from a strategic perspective, the key takeout from that is the work we've done over the last 3 years in regards to setting the strategy and understanding our purpose, the investment policy statement, so anything that we now do look at to invest in, we've got a framework to do it properly, and getting the capital structure sorted with the movement to LGFA. So looking forward, now we've got the foundations in place, it's time to start assessing opportunities and diversifying the portfolio. So I'll hand over to Fraser to touch on a couple of his points.
Thank you for that, Mark. So I guess the rubber really hits the road at those annual goals on page 6, and that's the means by which you measure us. So they're categorised in that same format as the outcomes and the objectives. The goals for the intergenerational investments remain the same. Property portfolios quite quantified, but the focus is really on those new investments, on diversifications and seeking new opportunities, and that's where we'll be giving some focus. Shareholder return, you see there's the increased dividend, goes from 1.2 this year to 1.4 next year, and as always it's underpinned by our relationships and working on those to ensure that we're closely aligned to council.
Thanks, Fraser. And for us, one of the key platforms of this year has been consolidating with the LGFA funding, and then to really leverage the property returns and a prime port dividend, which is continuing to flow through to grow the dividend stream up to TDC. And that's, as Fraser touched on, increasing that from 1.2 by 200k a year. Actually achieving that growth will depend a bit on the execution of the diversification strategy. We haven't allowed for any Alpine dividend to flow through at this point in time as it works through its challenges. So that will give you a consistent level of return, and TDHL being a sort of a buffer using with now its capital structure has been improved with the LGFA funding to be able to make that smooth, consistent return on the way through.
So hopefully that provides an overview of our thinking behind where we're going, both over the next 12 months and the next 3 to 5 years, and we welcome questions and comments. Thank you.
Ask a couple of questions. So I just see on that page, so what return on capital, roughly, what is it? About, is it 3.3%? Right? So that's what you're expecting to get. And I guess, you know, as a benchmark, are you looking at any other holdings companies and seeing what's actually being achieved? I mean, I know there's a few that talking about ports and their the percentages and how they're getting on, and I see Tauranga has sort of lifted their game. I guess just thinking about that, the amount of money that we've got tied up in, say, like sort of Alpine, for instance, and it's been quite a disappointment, to say the least. And yeah, the reason that the shareholder owns it is they like to think that they're going to have the infrastructure in place and the stuff that they need to supply them the electricity they require to run their businesses. You know, are you sort of you're quite happy you've made enough changes in that area to remedy some of the issues that perhaps you've had in the past?
Thanks for the question. There's a couple of questions there, I think. So in regards to the Alpine changes, we think we've made the changes that are required to work through the challenges. They are some reasonably significant challenges. They will take a while to work through. It's coupled with a changing electricity sector in regards to decarbonisation, electrification. There's some catch-up required as well in regards to IT and other large capital works. The governance team that's been recently put in place, there's strong engineering and finance capability in there. So that has the skills required for an EDB to deliver. And with collaboration with the other shareholders and the letter of expectation that goes through, there's clarity on what our requirements are. So I think we've put the right things in place. The key with long-term intergenerational assets, they're attractive from an investment perspective over the long term. Alpine has some short-term challenges at the moment that I think we have to accept. It has provided dividends of a scale in the past that were beneficial to us as shareholders that came through. And it's going through a down period now. With the changes put in place, when it comes back, it should return well over the long term as well. So I think we've got to be clear the changes have been made. It's not a quick fix. It's a good long-term investment.
Have you got some light at the end of the tunnel at this stage?
Depends how long the tunnel is, to be fair, Councillor. There's definitely light at the end of a very, very long tunnel. So we forecast no dividend for the next 3 years. But part of the long-term intergenerational nature of the approach we're taking is that we can have the ups and downs of different aspects of the portfolio to moderate those as we give a consistent return to TDC. So if we think back 10 years to Primeport, that was in a place where it needed significant capital expenditure to bring it back up. It had struggles at that stage. So you can see the difference, having diversified portfolio can provide a moderated return over time. We would be hoping that they're more moderated and that we do get better returns from both consistently, and that's what we're working on.
The upcoming, they're going to talk about building a new wharf, and I presume that's going to be quite expensive. Is that going to affect your dividend payment from the port in the future, or the near future, or hold it flat?
Well, there's no building a new wharf at the moment. So that hasn't been approved. There's upgrades of wharves at the moment. There would need to be a business case for any new wharf to be built.
Thank you.
But we will go to the second part of your question as well regarding benchmarking, because we do track benchmarking of each of our portfolio areas, and I think we've provided some info in the past to TDC. Do you want to touch on that?
Yeah, you'll see in all of our quarterly reports, we break down by the portfolio segments, Primeport, Alpine, property portfolio, what the cash and capital returns are. The net profit to shareholder funds there is cash and capital, and what I've done on those is taking out all of the incorporated associate surplus from Alpine and all the Alpine dividends. So that's basically TDHL based on Primeport and property. So it is at definitely the lower end of our expectations, but it's the worst case scenario as we can see.
You're going to increase your EBIT by $500,000 between 24, 25, 25, 26, and then it stays flat. How are you going to do that?
Yeah, there's some disposal of showgrounds, interest changes in interest rates, so interest cost savings.
G'day, Mark. Look, let's be honest, Alpine Energy's a stinker of an investment. Look, there must be somewhere that when you look round, there's a better return. You say 3 years, it's more likely to be 6, no return. I mean, we're pushing you to try and help with an industrial park, things that grow the district. I know it's a traditional asset that everyone loves and hold, but it's no longer silverware, I don't think, because surely when you sit around the board table, you can think of better places to invest the money in something that's not going to return. Because it's regulated, there'll never be a great return because they can only charge X or Y. And whoever buys it's still got to deliver lines and electricity. So what makes it so golden? Is it the fear of the backlash, or do you really believe it is a good asset?
Couple of parts to that question as well. So the mandate from council is it's an intergenerational asset that we're holding. So we don't go and assess it regularly to go, will we get rid of it? Because the feedback in the past from 4 to 5 years ago was we're holding it. So that is how we've operated. In regards to the return on it, the regulated point is quite important. So while it has limitations, it should also have a relatively stable return. There's also the cash versus the capital return, and it has provided a strong capital return over a number of years. That's strengthened the balance sheet, which provides us more borrowing capacity for other diversification. In regards to it as an investment itself, I think it then goes to the long-term nature of it and the comments I made before about short versus long-term. And at the moment, it's not in a great place. There are opportunities potentially with rationalisation of lines companies and smaller and medium-sized ones moving to scale or different operating models to make it more efficient. You're right, a sale would mean that lines are still provided and the returns are there. We could do different things with the funds. There is quite an appetite to invest in lines companies, and that is because they are seen as a good long-term investment. So if they're a good long-term investment for the private sector, they can be a good long-term investment for a CCTO as well. So based on that, we see it as a good long-term investment that we're moderating within the investments, within the total portfolio. Are there other things we could do with the capital? Absolutely. Would it give a quicker short-term return? Almost certainly. But until we have a mandate to go and look at disposing of Alpine, we're not going into those too deeply.
Thanks, Mark. So it's back on us. It's a political decision. Look, I get it, and I'm not saying it's not. And other lines companies may be solid, but, you know, right now, when we're on a tight squeeze, getting a zero return from one of our major assets, like Alpine, through you guys, just isn't where we want it to be.
And I guess ultimately, without saying yes, it is on you, we're happy to engage and discuss what other returns we could get and to do the work, right? If that's what you want us to do from an investigatory perspective, open to that. But really, we do need a mandate to do such. And whether it goes anywhere or not, it probably depends on the results of any investigation work.
In an election year, it's going to be political suicide to put that up. If it was anything like 5 years ago when, you know, we had to kick people out of here because they were going to shoot us, let alone everything else, because we were selling the family jewels. You know, so, and it was vested in us for nothing back in the day, and yeah, it'll be an interesting public discussion to have if we put it up there for sale.
I mean, there's a couple of things in this space. One, there's Local Order Done Well, which is going to introduce economic regulation. So I think the ratepayer is going to mature in the understanding of economic regulation over the next couple of years. You've also got changes around the Lines Trust Board. So they're looking probably a different lens. There's some very capable people that have just come on to support others there. The other thing is the little councils are looking at that asset and saying, hey, it's not delivering a return, which could provide opportunities for those other shareholders as well. So I think there's some things to watch pretty closely there, and it's not just to make a rash decision, it's just to watch the market a little bit. And we understand, you know, that there are, to your point, Mark, infrastructure investors sitting out there that would love to gobble some of those things up. But yeah, it's interesting. But I think the next couple of years is probably key to just watch closely.
I think it does highlight, though, having such a significant component of our portfolio with average to poor returns at the moment does limit the total return we can provide. We can moderate it, but it does limit our growth potential as well in the short to medium term.
Yeah, look, and that's the maturity of the story, isn't it, with the public? Once they understand that, and I mean, I've got in my in my desk drawer the consultation from the last time, and you've got it, you know, sitting there, and it was horrid reading back some of the councillors here actually submitted on that as well. But there's some really good lessons in there on, how you tell a story, and I don't think the people understood that. But look, I'm not against having the conversation. Councillor Puddington, I think it's a really good one, and we need to think about how we do that, as far as, what it does, and just even to help the public understand what the asset is, because I just don't think they really get it.
Yeah, clearly I wouldn't say let's sell it and we don't know what we're going to do with the money, but we had a clear plan and said, here's an asset that's returning nothing for 10 years, we could invest here and get 5 million a year over 10 years, or whatever it is. I'm sure some ratepayers will look up and say, that's a good idea. But I get Mark's point, we haven't given them the authority. That's cool, that's a discussion we'll have. But I think that's where they got it wrong, Pete. They didn't tell us what was going to happen to the money, and it was just a grab.
Absolutely. If we, 2020 hindsight's always awesome. It was $100 million at that stage, those assets, and then straight after those decisions were made, there was some movement in terms of the government around their ability to work in that environment that had a massive impact on the value of those shares. Now, I don't know if you know, Mark, or someone, what those shares might be worth at the moment.
130 million.
I've got a couple of questions on risk and governance that I'll save till later, but just while we're on returns, on your page 6, net profit to shareholder funds, in last year's SOI, FY26 set at 10.7, FY27 at 7.2, and now we're down to 3.3 and 4.1. I just wondered if you could speak to that. And the second part of the question is around shareholder funds to total assets, greater than 60%. That was up around 87, and I see further down we used to have greater than 25%, which is a little bit scary. But I just wonder if you could talk to those two things, please.
Okay, I'll answer the second one first. And the over 60% versus 25, 25 is quite aggressive. But with the LGFA funding, we've aligned it with that, basically. So we just use that as the opportunity to put a more commercially appropriate benchmark in.
And so when we report on that in the annual report, we'll provide the actual number, and it is tracking in that mid-80s. But we just want to make sure we're staying above our LGFA covenant. Around that net profit, it's all dictated to via incorporation of shareholder surplus, and the forecasts that we use, particularly out of Alpine, have not been met and will not be met, so we've recast them now because it predominantly is driven by dividends and incorporation of shareholder surplus and revaluations too. So we've just refined that.
Before, when Mr. Trainer asked you about how you're going to go from, you're changing your EBIT, the mantra around the council table at the moment is, just need to look for efficiencies and cut costs and increase your revenue. So what kind of conversations are you having around your board table? Because the expectation from the community on us is that, and so I'm passing that expectation on to you.
I guess the discussions around the board table at the moment are focused, if we start at the high level. So we are looking to get the 7% return on the property portfolio. And we're looking to diversify through the new investments and diversification. With the 7%, new leases and any upgrades or improvements come to the board. So we have benchmarks that we track there as well to make sure. And there's also, we set internal KPIs as well to drive those performance outcomes. And then we're also looking at the new investments to try and grow our returns. So we've set in here at least 3 new investment opportunities. We've actually set internally values around those as well and return levels so that we can drive the profit through to the bottom line.
And so do you look at doing things differently? For example, you're in your new offices now, leasing some of that space, sharing some backroom services with other council organisations or things like that, just to reduce costs, because, you know, I keep saying we can't just keep doing things the same and expect a different result.
So yes, we do and have. In regards to the new offices, we've got to bring it up to a certain earthquake strength. So that work is being worked through. In conjunction with that, Fraser has engaged with the other council CCO to see if they would like to come in with us to get rent there. But while that's going on, he's also talking to external parties as well. There is a time lag there because we need to get it up to standard and make sure that it's ready for anyone to come in. But we are talking to people about tenancies and maximising the return. And you might want to talk about any other ones that you're trying to.
Yeah, I suppose the property portfolio in general's nearly at capacity. We have got a couple of inquiries for prospective tenants into our new offices, and I'm just about to get a website up and running to advertise that. Looking forward to riding the wave of uplift that happens in that general South Stafford Street area, which will help. But I guess in general, you know, the company's pretty lean, and with paying out the proportion of dividend that we do comparative to our EBITDA, there's just nowhere to hide. There's no room for error, and that's showing up monthly at finance report times.
If we also think about the LGFA funding, so that's another area that we've got material savings in. So we are looking at those aspects.
Group, though.
As a group...
Save, but we will lose. Well,
No.
it's cheaper.
So at the moment, so the first step was to move from external banks to LGFA funding. So there's a material group saving to that aspect. The second stage is to have a discussion with TDC about the best overall group structure. So from a TDHL perspective, it would be beneficial to be direct to LGFA, but then that doesn't necessarily benefit the overall group. And we're just open to having that discussion, and we can just have that at an officer level, I think, and see where it goes from there. Because there are aspects in that which uncalled capital, for example, would need to be extended so that we could borrow enough from LGFA to pay it back. So, but that's just an ongoing matter. I guess the LGFA funding, though, is an example of the things we were looking at and have actioned in regards to being efficient and lean and giving best value for ratepayer.
Some other questions, just pivoting a little. So one of the, as you know, one of the main functions of the board is to manage risk, but I don't see a lot of that in here. And I'm thinking about long-term strategic risk, and when I was going down rabbit holes over the last couple of days, I see that the owner of Port of Tauranga is thinking about divesting some of their shares. So have the board thought about the long-term strategic risk of that and potentially having a different co-owner in our prime port, and if those shares came up for sale, how we might take advantage of that, or what the risks are to our community in TDHL?
We do have an overarching risk framework, and we do look at the business risks as opposed to the health and safety risks as well. So we also have the health and safety risks, but we do look at organisational risks. In regards to that specific aspect, we haven't got that on the register, and we haven't discussed that specifically. But we can put that on, and we'll do it next meeting.
Same conversation with Alpine, just because, there's council and Lions Trust ownership there. What is the risk or the opportunity, if that ownership changes?
And without getting into too much detail there, based on the commercial nature of relationships, we do have those discussions.
Yes, if I can add to it, whilst we don't articulate in a risk framework, it's very much ingrained and embedded in our thinking of how the the business runs, and that's why we identify the value of those relationships with our joint venture partners or our fellow Alpine shareholders as being one of the most valuable assets that we've got, and deserving of significant effort and importance, so that we are well positioned to have those conversations and to be able to respond to those sort of situations. And, you know, especially with Alpine, we do a lot of work with fellow Alpine shareholders.
But what we can do is put more into the SOI in regards to risk, if you would like that filled out a wee bit, without getting into the specific risks themselves.
Yeah, I just want some comfort around the process that the board goes through in managing risk, and I'm not talking about health and safety risk, but environmental risk, you know, climate change risk, Councillor Booth, you know, and economic risk and things like that. My other one is my other favourite topic, which is governance. And I see you've, you know, put some things in there around governance and that, and skills matrix, which is great. But I also have concerns around succession plan and tenure. And when I was going down my rabbit hole for the last couple of days, it came to my attention that one of our Port Board members has been there for 19 years, which in any industry is a long time. And then the next two are 8 years and 7 years. And so in very quick succession, we could have a turnover of board there. And what are you doing about managing the risk of that and the succession plans, not only in your own board, but also in the boards of our subsidiaries?
So in regards to our own board, we had a session on that at the last board meeting, and we put down the existing tenures of all existing board members and the potential timeframes for rollovers, and analysed that over a 10-year period. And we're going to be doing a summary paper back to councillors, so that particularly at the moment we're at 4 directors, we've typically been at 5. That'll identify not only the skills that we require for the 5th director, but also the rotation timeframes that might be beneficial for all the directors in regards to rolling over chair, deputy chair, any Alpine appointees, and anyone on the port as well. So we've done some thinking around that, and we'll come back to you on that with a paper.
And I know you're only a one shareholder out of 2 in the port, but will you does the port have something similar like that, and board charters around rotation? And, you know, I've seen board charters where you can only be on there for 12 years, 9, and then plus 3. So do they have those in place, or are you doing any work on that?
So I'll take us back a little bit further in regards to the port. So when the joint venture partnership started 10 years ago, the port was in a challenged position. There has been a lot of focus on infrastructure improvement, business growth, and maximising the value to the Timaru economy of the port over that time. I think it's fair to say that some of the it's been a very strong relationship-based approach between the 2 shareholders as well, but it's fair to say that we can put some stronger processes in place in regards to good governance practice. So the port, with those long-serving directors, has delivered great outcomes. So we don't want to, so I'm not saying you're questioning that, but I just want to make that clear. So those people have done that. We are conscious, though, that some of those discussions need to happen, and those discussions have been started. So we did have the collective skills matrix discussion happen with appointments. We have also done the joint letter of expectation that has gone through last year for the first time, and we will be talking about the rotations. There's been the informal discussions on them, but we need to keep continuing the discussions. So without disrupting a high-performing business, we need to manage transitions, and so that's where we're at the moment.
So my final question on your own skills matrix, because I'm conscious we need to appoint another director, you talk about looking at 3 kind of joint ventures. Do you have specifics around what those joint ventures are going to be, so that we can identify the skills that are going to be for the, like, you must have you're not going to go, well, you might look at a restaurant or a preschool or, so you must, do you have some framework around that so that we know the skills that you're going to need when we make our next appointment?
I don't know if we'll be going into joint ventures or not specifically, so we'll be looking at 3 new investment opportunities. If we ran it through the IPS, I don't know if a restaurant would necessarily tick the boxes, so we've got some protections there, and that's why the framework's in place. Maybe they're highly lucrative, I don't know. We're not going to be real estate agents either, so, yeah. So we'll run it through the IPS. I think, I know, in regards to the skills matrix that we're looking at, it is in regards to an investment portfolio that is intergenerational and needs to diversify. So we've got some very strong skills around the table at the moment. We've got accounting, finance, we've got legal, we've got infrastructure, contracting. There's a lot going on there. We've got options, and the skills we've identified relate to more of our overarching approach than detailed business specific.
Hey, Mark. With Prime Port, we were trying to get a local director so we had some, reach on these people. They weren't just in and out of town. I understand our local appointee has just left town, and I just wondered, does that affect your thinking or position?
So that's something we are aware of. The local aspect is obviously very important to us. It's not me, I haven't left town, just so everyone knows. So that came up. We had the chair of Prime Port present to the board as part of our standard cycle as well, and the question got raised then, because we're always conscious of director performance and our own appointees, and it was raised by Darren, so he can give an answer on what came back.
So I asked that question of the chair of Prime Port, that that had been brought to our attention, and was that having an impact on their contribution? And they said no, that they were having strong local knowledge and bringing that to the board table.
I guess, though, lots of people can make great contributions. One of the things we wanted, without harping on it, is someone local that we had the impact for, because living in the community, knowing what the community does is a big difference to driving in or flying in for a meeting every 6 weeks.
So it's not quite flying in every 6 weeks. The director is a business owner within the district, continues to be involved in that business. We know the schedule that they are in town, which is regularly. They have, and I don't really want to get into too much detail on personal
That's fine,
either,
mate,
but we've interrogated it, and in terms of local connection at the moment, we're comfortable and the chair is comfortable, taking into context as well the broader skills makeup and contribution, because local's one aspect and it's important, right, and that is what we wanted. That's still provided by me, it's provided by and large by this person in a different way now.
Yeah, that's cool. Look, you don't.
Yeah.
I'm happy with the answer, but these are the questions as councillors.
Yeah, and we ask the questions too, because obviously it's something that's important to us. But I think the key thing is that we are monitoring it and we are continuing to monitor it. So in the same way that we need to talk about the overall makeup of the board and the tenures get raised, the local mix needs to be raised regularly as well. And those things will continue to work themselves through.
Believe it or not, people are passionate about, what we do in the district, and they keep a close eye on TDHL and other places. It's not a criticism, but it's just getting the answer out there so everyone knows.
And we appreciate the opportunity to provide the answer as well. And hopefully we've given comfort that we are asking the questions.
Can I circle back to Alpine? So it looks like in this SOI in the 3 years, that Alpine is not going to return any sort of dividend. So is that indicating they're not profitable? Or if they are profitable, they're keeping their cash to reinvest? Because there is a difference between your capital investment versus your profit. And I'm assuming they're depreciating their assets at the right level, so that's generating cash to invest. Because, you know, I was always under the assumption they're in trouble because of the miscalculation, but it feels to me that it's potentially more than that.
Yeah, there's a significant amount of deferred maintenance that they are catching up on, significant amount of deferred maintenance, enterprise improvement programs around getting the business fit for the modern and future electricity sector, and as well accommodating for uplift as a result of large process and manufacturers transitioning away from coal-fired boilers. So there's quite a bit of network resilience and upgrade that needs to be undertaken. So they are profitable, but a lot of money is being reinvested in the network.
Capital, will that end up on the balance sheet as capital or expenses?
Capital, the majority of it capital, the majority of it capital. What Alpine does and the way it is handled from a balance sheet and accounting perspective is completely and entirely dictated by the Commerce Commission.
So is it true that we've got no capacity at Washdyke for electricity?
No, there is future capacity there, and there is planned upgrades to the Timaru GXP, which is at Old North Road, which will significantly increase capacity again. But as it stands today, there is sufficient capacity for a significant amount of new business at Washdyke.
Oh, okay. Well, I was talking to a major manufacturer looking at a new process, and there's not enough electricity according to them.
Yeah, feel free to pass them on, and we'll get them talking to the right people in Alpine and ensure that.
And the other, I guess the other thing too is energy is not only electricity, it's biomass and wood pellets. So there's a number of things. It affects the port, and it also affects the ability for us to attract manufacturing to our region. So it's not only going to be electricity, it's going to be a whole lot of other stuff, I think.
Mm-hmm. Yep, that will be.
I think Fraser's point is if there's someone who is having challenges, introduce them to Fraser, because he said there's enough electricity capacity, and so he'll facilitate the discussions with Alpine.
Going back, as a part owner, how do you get confidence that they're not over-investing or under-investing?
So they prepare an asset management plan, much like council prepares an asset management plan, and we actively engage in that process. Theirs is subject to significant rigour from the Commerce Commission. But at the end of the day, the amount that Alpine can reinvest in their network is dictated to by the Commerce Commission, and the Commerce Commission looks at EDBs across the business, across the country, and very closely at Alpine's asset management plan to determine that. Very restricted.
So on that profitability side, have you guys had a look at benchmarking of other companies across the industry and what they are returning, what they're investing, etc.? Just understand, is there some, cash cows sitting out there, or is it consistent philosophies around investing back in the asset?
It's a really difficult picture to unpick. We've done quite a bit of benchmarking in the past, and all EDBs are EDBs, but all EDBs have got their subtleties. But some of the broad work that we've done does indicate that about a 1% cash return is about right for an EDB, and then depending on the valuation cycles and the default price path settings, then your capital return varies on that. But through the last default price path setting was really, really restrictive because of the low WACC rates that were applied to EDPs. Some of the EDPs shuffled it around and made it look a bit better, but invariably it's all caught up with them. So we're pretty comfortable that around a 1% return cash is fair.
And I think when we did our workshop for Alpine and Prime Port in the middle of last year, we may have provided some numbers on that, and we can update those and provide them to you so you can get an updated view on the sector.
I guess without labouring a point, when Fraser responded, 3 comments, making sure Alpine was fit for purpose, deferred maintenance, that means they've been paying dividends instead of doing R&M, and they should always be fit for purpose. So you're not selling me a great lot of confidence. I'm pleased in the uplift, but you need to keep your foot on them because they've still got that Commerce Commission decision to come out that is likely to impact their bottom line as well.
Yeah, I mean, like any infrastructure company, the decisions that were made 15, 10 years ago, the consequences aren't born until now. So, there's been a lot of work that's been done in the last couple of 3 years to create some significant improvements and some significant betterment. But, like we've been saying, the light at the end of the tunnel is some way off yet. But that's just the nature of infrastructure companies, and it's no different to water, it's no different to roads. The consequences of the decisions we make today aren't borne out for many years to come yet.
Alrighty, further questions? Anyone on the other side? Right. All good in Tamukit? Yep. Geraldine, you're good, Kevin?
Kevin actually said if you've invested in Synlait 3 weeks ago, their shares have got up 150%, so...
Yeah, I think they've been in the news over the last couple of years with some challenges as well, so it's about picking the right bets at the right time.
They're only taking yuan at the moment.
Yeah, nice response, Mark, nice response. Can I just ask a general question? How are we going with the lump of dirt in the showgrounds and the developer? Is he showing any enthusiasm for anything?
I understand he's come in for a consent. Is that related to a consent?
He's trying to get I believe he's trying to get an extension to July, a variation to the extent to extend.
And so our contractual conditions are through to September, so that falls within the requirements that we have.
I guess it's that stick and carrot thing for me, though. The community drive past, the developers for some reason slow on the intersection that's causing a headache. If we've got a stick and a carrot, I'd like to see us use it through our holding company, however we can. Because, there's only one reason he hasn't moved the dirt and doesn't do the intersection. He didn't want to spend the money.
Yeah, I think in terms of stick and carrot, the benefit, the opportunity that we can provide is the lots 7, 8 and 9 in regards to providing the land for complete stage 2, which would see an uplift in the value for the developer. That motivates to move the dirt. We've put that contract in place. We've got the non-refundable deposit. I think we've put in place what we need to at the moment, and there's not much more leverage we can do.
At the level that you initially, the option was for?
No, it's slightly above that.
Okay, so you've got an improvement. That's good.
So not talking about the original contractor either, you're talking about someone coming in and picking up the remnants of what it was about, and you had to negotiate at that level. So that's what's given them that time.
Yeah, no, the original negotiation was with the original developer, so the changes happened subsequently. But yes, there is a new party involved now. Still bound by the same terms and conditions that we've put in place.
And any interest on South Stafford?
So that still has a 2-week period to tender close, and so at that stage we will know where we're sitting with it. So if anyone wants to put any bids in, you've still got time.
Alrighty, cool. So anything further? Otherwise, we can look to close up. Yep, brilliant, thank you. Hope that gives you some insights, but I think that's pretty
So we're happy
comprehensive.
with the general direction.
Yeah.